Hello, 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 hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? Hello, hello. All right, ladies and gentlemen. As you know, right now, I'm currently in the golf course, relaxing, enjoying this beautiful view. I'm actually sitting right here right now and have a the keyboard is actually here, and I have a microphone right here standing up. And yeah, this is my workstation here, right? My portable workstation. Wherever I go, it follows me. And what follows me is the Al Stock Trades terminal, right? The terminal that billionaires use, the data that institutional investors have had access to for countless of times. In fact, you can analyze this here. You can see number of shares change. You can see a lot of shares were bought here and a lot of shares were bought here for Apple. And it's very cool. It's beautiful. Here's the beautiful view. And soon we will have a summit at this beautiful golf course. And you'll see the power of the networking that we have for the Al Stock Trades platform, right? We have people and lifetime access members all around the world, and I'm very excited. So in this video, we're going to go ahead and we're going to talk about some market outlooks in regards to what I'm expecting for Clover Health and the overall market. I'm going to read this, and the fact that I'm reading it, you guys know I don't like reading, have the computer read to me, right? But I'm going to go ahead and just read this to you guys because it is very important. But we went ahead, and without further ado, I would like to release to you, we reactivated our SAS coupon code. Yes, you heard that correct. We activated coupon code SAS. This is one of the biggest sales that we have, where you're going to be getting $1,200 off lifetime access, and that's including access to the premium stock terminal that you see and that has all of the calculations that we do. You have access to all of that lifetime access, coupon code SAS. So we're going to go ahead now and talk stocks, and we're just going to push this. Oop, I pushed it in the wrong area. Let's push this here. And let's basically take this and put it there. Okay, good. So let's go on. What's going on? B-Rad Cooley, 8 days left till earnings. How you doing? 250-day range, 350 to 480. It's game time. Rumor has it CLOV will make us all rich. Keep that on the DL, right? Love it. All right. So first things first, what I want to do is overall, of the past 5 days, Clover's dropped in regards to tariff concerns and talks. Nothing fundamentally has changed, but we're on a pathway towards recovery. But the beautiful part is, even though the S&P 500 is down, we're actually up 10.54%. One of the stocks that we called out on at $6.50 is actually up right now back to $100. In fact, we called it around, I think it was around $6.42. Now it's up 1,400% So it's around a 14-15 bagger. In fact, the highest it was a 17 bagger. So the point is the market's slowly recovering, right? And we're going to go ahead and give some research. So first things first, I'm going to go ahead and I'm going to start it off here, right? And I'm going to read this and then just kind of follow along, okay? And if you guys enjoy this content, go ahead and smash that like button because it does help with the YouTube algorithm. All right. So here's Clover Health and earnings sentiment. So Tesla's recent positive reaction to its earnings report is noteworthy. Despite posting what many consider disappointing results, the stock rallied, signaling that markets had likely overpenalized it in anticipation. This reaction sets a crucial precedent for how other companies might be perceived post earnings. In fact, I looked at Clover's earnings, and to be quite frankly honest, I wasn't impressed. But ultimately, the stock rallied a good 10%, right? So that basically tells me that it was overpenalized. So why is that in relation to Clover? How does that basically, why am I talking about this? Well, let me explain. So Clover Health, for instance, is scheduled to report its Q1 2025 earnings on May 6th. The company is currently trading approximately 28% below its most recent peak, indicating that the market has already heavily punished the stock in advance. What's particularly remarkable is that for the first time in Clover Health's history, analyst price targets are above the current stock price. Let me go ahead and say this again. For the first time in Clover Health's history, analyst price targets are above the current stock price, with the average sitting at $4.50. This mirrors our own brain machine model's valuation, further reinforcing confidence in this target. From what we know, Clover's expected to report over 37% of revenue growth in Q1, which is a strong indicator of its improving fundamentals. Now, again, a lot of dumb money folks out there, retail investors, they don't know that. And to be quite frankly honest, they don't even know how to do that. We know that because one, they gave guidance, and two, we can back calculate it from their surge in membership growth, right? So the most crucial figure I'll be watching, though, is free cash flow. We need to see whether the growth in revenue is translating sustainably to financial strength. This earnings report may be a turning point. And the fact that Tesla was able to rally on bad earnings, how do you think Clover's earnings are going to rally on good earnings? And the fact that we're priced below analyst price targets, which we know are bullshit because we know Clover's worth actually more. Okay. So, capitalism, policy, and market structure. Capitalism at its core relies on companies providing transparent guidance. As you can see from the experience that you have from hearing Clover Health's guidance on Q4 of 2024 regarding the guidance of 2025. However, recent political and administrative decisions have undermined this principle. A lack of clear guidance distorts investor confidence and market efficiency. So, breaking down the structure in support of free markets. So, this is essentially what's happening right now, right? So, let's go ahead and let's go specifically in regards to this. So, this was compounded by disruptive political decisions, which have since started to reverse. The most recent example is that so my apologies here. President, I was talking about the former president regarding the first tariff, but I ended up removing it. So President Donald Trump's shift in tone regarding the Federal Reserve. So most recently, Donald Trump had his he said that let me just go ahead and read it. So Trump stated he has his intent to fire Fed Chairman Jerome Powell. However, he is now walking back his statements, saying he has no intention of doing so. Markets responded favorably to this development, with prediction platforms like the Poly market showing a sharp decline in the odds of Powell being fired, falling from a high of 20% down to 15%, 14%. Now, obviously, 20% is not that high, but it shows you how sensitive the market is at looking at Trump as just crazy erratic, who once he says something is going to do it. So this reinforced the importance of maintaining the Fed's independence from political influence. That's a big deal because the stock market will not perform well. It'll be Armageddon if that happens, right? So Wall Street's influence on politics. Now, I'm going to get real with you guys here, okay? So interestingly, many prominent Wall Street figures who typically lean Democrat have expressed disappointment, right? Let me go ahead and make sure the microphone is good here, okay? You guys can, okay, yeah. So they've expressed disappointment with Trump's recent economic tactics. Even Ken Griffin, a known Trump supporter, criticized the current direction of the trade war, calling it nonsensical. For those on Main Street who believed Donald Trump could break the mold and challenged entrenched financial interests, this moment has been eye-opening, right? It illustrates how deeply Wall Street is embedded in the global economy. So much so that even billionaire president like Donald Trump couldn't override its influence. That's precisely why we developed the stock terminal. When you can't even beat the system, you need the tools to join and outperform it. Donald Trump was supposed to help Main Street, and he really tried to attack with these tariffs. He got some progress, but you can see that the establishment really punched him in hard, right? And now he has to walk backwards. In fact, I think we look a little weaker, the fact that he had to basically dial down the rhetoric in response to the overall tariffs regarding with China. But I get it, because Wall Street interests are strong and lobbyists actually control the president. If you don't believe me, go look up a video with Putin saying that presidents after presidents have come here and they all end up, in the beginning, innocent endeavors like Obama, wanting to help, right? Coming from the bottom. But ultimately, lobbyists and lobbyist actions always override the will of the president, which, unfortunately is backed by the will of the people. I've seen this time in and time out, and I promise you guys, if there was a better system, I would tell you. But the fact that I can't beat Wall Street, we have to join them. And the only way to join them is to democratize financial literacy and to show you the data that they have. Okay. So let's go ahead now and look at the tariff policy and beige book insights and recession odds. So there's also been a notable shift in Trump's stance on tariffs. He now hints that tariffs, particularly with China, may come down substantially, suggesting a potential U turn that can reduce global trade tensions. This aligns with insights from today's Federal Reserve Beige Book, which summarizes economic conditions across all 12 Fed districts. The report it did not indicate financial conditions are deteriorating, but rather acknowledged the known uncertainties, particularly surrounding those tariffs. So, with this in mind, as Trump as Trump backpedals on previous hardline policies, the likelihood of a near-term recession is diminishing, which is a good thing, right? This is evident with the VIX, which has dropped significantly, closing at $28.45, which is under $30. Signaling decreased volatility expectations, recovery trajectories, and market sentiment. So currently, the S&P 500 is nearing a 50% recovery from its previous highs. The critical question is whether we are going to get a V-shaped recovery, which obviously is going to be momentous. It could happen, or a reverse L-shaped recovery, suggesting stagnation or potential further downside. So these are some risks, but again, I don't think these risks are going to happen, but it's good to talk about them. So the trade reform uncertainties continue, the supply chain disruption and potential ripple effects that could lead to a global recession. There's even more possible scenario where earnings per share drop more than 25%, which could initiate a severe correction. When the S&P 500 could drop more than 30%, right? Which will institute a financial crisis. And on top of that, because of these tariff issues, it could drive inflation expectations upward. However, Trump knows these issues, and these issues will be devastating. So this is why, again, you could see political capital tied closely. He needs to reverse course because then he'll lose control of the midterms. And then Wall Street now is exerting heavy pressure. So the probability of these worst case outcomes is going to be declining because he's realizing that he really can't crack this system. Okay. So that's pretty much, what I wanted to talk about in terms of the market. So the big takeaways is Tesla had crappy earnings. Their stock rallied. I think Clover is going to have good earnings. Their stock is going to rally like crazy. This is the first time they're going to grow 37% in a long time. It's been like 2-3 years since they're back on the growth trajectory. And the good part is what I'm looking at is if they can grow responsibly, but at the same time remain free cash flow positive, of course, operational cash flow positive and free cash flow positive on a pathway to profitability in 2026, I think we are going to be some rich mofos. Okay. So that's what I had here. Let me see. Obviously, the market's doing really well based off of, hopefully you can synthesize based off what I've been saying. Smart money and dumb money. Well, look at this, guys. Dumb money's coming back. We're back, right? So dumb money's coming back, right? And what that basically means is we might start to get into another rally. And we're watching this right now because there are some key metrics that we need to look at. If we go to peak to trough, we are personally 50% away from a recovery at the hairline. And right now, all eyes are around $5,542 regarding the S&P 500. And ultimately, that's kind of what we're looking at. The big thing is we got a technical breakout. And this is a huge concept right now because whenever you draw this line, we had fewer technical breakouts, but we broke down this fib, we broke down this fib, and we recovered at this Fibonacci sequence retracement. And now we have a technical breakout. And the goal right now is, can we ultimately be able to recover, right? That's the big thing. If you look at IWM, it's on a pathway of recovery. Palantir is obviously, it barely even touched the 200-day simple moving average. Interestingly, for Clover, it basically touched the 200-day, and now it's that's what these stocks do. They touch the 200-day, and I think we're slowly going to be on our way back to the to making new highs, right? So there's that. Let me see, what else do I need to talk about here? And let me just go to the, let me go ahead and just kind of very quickly, let me just, damn, Al, you're a smart cookie. Well, I'm happy that you like the research. And I'm happy that we're kind of, I just wanted to synthesize everything together so we can essentially be able to get you where you need to. The whole point is you have all this information out there, and you need someone who has experience, who's seen these games happen, and is able to take large corpuses of data and translate them into meaningful story patterns. Okay. So exactly my point. I want more shares and exactly. This is an opportunity. We had a rise before earnings in the past quarter, and it has a fall following the report this time. So let me. What I'm going to do before this right now is I'm going to go ahead and I'm going to activate this and open up institutional ownership real quickly here. And once I open up institutional ownership, we're going to hit the 25-year section for Clover. And what I want to show you guys quick right before we end the call here, I want to go ahead and show you the ownership percent. So you can see, guys, in fact, let me just go ahead and just kind of zoom in. Let me just zoom in on this so we can see. So you can see, ladies and gentlemen, or you know what? Let me just go like this. So you can see back in 2021, 2020, institutional ownership was around, better just to zoom in, was around 42.5%. And it has precipitously dropped right around here to where we are slowly basically all the way down to, what is it, to 15%. And now we're getting to a point where we're basically slowly recovering. Now, you might argue and you might say, well, Al, I don't trust that. I understand. Well, there's another way to look at it. There are increased positions. Again, 2020, 2021, the number of increased positions were high, but then they started to decrease the rate of increasing positions until most recently, by the way, these are big boys institutions, part of our premium Al stock trades terminal. You can see these new increased positions have surpassed the overall red line, which is the simple moving average in association with a 5-period analysis of the given section that's being studied. And you can see right now that we've broken into a position where we are highly certain that we are about to get to institutional ownership back to 40% levels. So that's really big, and I'm very excited to see that play out and happen. So that's it, guys. Honestly, I mean, it's I'm really excited to see this play out, and ultimately, investor holdings is increasing. We basically kicked up, more institutional positions are being held, and now we're going to see the total invested start going up, because right now we're hopefully it's going to be past the $1 billion mark. Right. And we can look at that and other positions like SoFi, Palantir, and redo that analysis. But it's pretty much plain and simple. So anywho, guys, I hope this was helpful. I just wanted to dial everything down. I think that the earnings for Q1 of 2025 is going to be very good, where we will, I think, jump to the price target potentially of what the analysts have around $4.50. And maybe even higher. So I'm expecting the next 3 months to be very well, do well for Clover, and for the people that had the opportunity to, essentially buy this wonderful dip. Congratulations to you all. Now, for individuals that have emailed me in regards to the lifetime access, well, we have a coupon code SAS, which is $1,200 lifetime access. We went ahead and did some amazing things in regards to the website. We went ahead and changed some things around so it looks a lot more professional and clean. You can see now that this is not just a course, it is a software platform that has over 2.5 billion outputs of institutionally graded data. And you can look at this Wall Street level financial data without the $30,000 yearly price tag, right? And you can see and you can play this demo to see how it looks like. And ultimately we're supported. We've been featured on Bloomberg, Yahoo Finance, NASDAQ, and our platform is reputable, and our platform is strong to a point where we are able to secure funding to where people can go ahead and utilize a firm or Klarna or Afterpay to utilize to put the platform on these services, so you can essentially pay for lifetime access, right? So essentially get lifetime access. So there it is, guys. I'm very excited with this, and Let me see. Did you post a Clover earnings outlook? And yep. I posted this on here, but also you can look at the earnings using the softwares that we have, especially on this Discord stock terminal. You could look at the potential price increase based off of the percent upside movement based off of the options chain. And I think Rabdo can show you that one, right? All right, ladies and gentlemen, I'm very excited for this new chapter for Clover. And I'm going to go ahead and go hit some golf balls in the simulation room. And I'm going to go live the life that I want all you guys to live. God bless you all, and I'll see you on the next one.